Hello and welcome to this week's webinar with me, David Jones, and Capital.com. If you're watching the recorded version of this, it was held live on Wednesday, the 16th of May at 12:30 in the afternoon. So this is a webinar that we're going to do every week on a Wednesday lunchtime. We're going to look at the major markets, so euro, pound, gold, oil, indices like the S&P, FTSE, DAX, that sort of stuff. See what's been driving them over the last few days and some of the levels to look out for in the days ahead. I think it's been interesting. I think particularly, I think I put on Twitter, I think three markets to have a look at in a bit more depth today. The pound because of the size of the decline, gold because it's broken a big level, and the FTSE because it's nearly back at fresh all-time highs. So we'll get into that. But first of all, let's just do the risk warning. So I put the risk warning up there so everyone can read it. All of these webinars will get recorded. So if you ever miss out, the recording's always there. If you're registered, you get an email a few hours after, I think, with a link to the recording. The webinars run for half an hour. And what we'll also do, as well as looking at markets, each week we'll take a look at different trading strategies. And this week, I think we're going to look at false breakouts, where a market breaks level, is meant to go one way, but ends up doing something different. So I think we'll take a look at that today, because I think it could be particularly relevant when it comes to the likes of gold and the pound. So we'll look at that in a bit more detail, this idea of false breakouts. We're about 10 or 15 minutes in. I'm actually going to be showing two trading platforms today. There's the existing Capital.com trading platform, the web platform, but there's also a new one coming, which is an absolute all singing and all dancing trading platform. So we'll jump onto that so you can see it as well. I think it's really exciting when that thing gets launched. There are a few glitches to be ironed out, as there always is with new software, but we'll do something of a sneak preview of that. Right, that is enough risk warning, I think. So let's take a look at what's going on. I thought the really interesting market to start with would be pound US dollar, because this is a market that has been clobbered in it's the last month or so. If you're looking on the screens there, we had the peak, 17th of April. The market came within a few points of 144. And since then, we've seen a turnaround not far off 1,000 points. That's a massive slide for the pound. The last sizable slide we had, pound US dollar, we've got to go back to September when the market touched 136 and then turned around pretty quickly and traded as low as 130. So we saw 130-ish. So we saw a 600-point move back then. This move has dwarfed that. And clearly, there's a couple of reasons behind it. As ever, it's Brexit. It's very much a Brexit-driven market. Pound, US dollar, pound against everything really at the moment. How are the Brexit negotiations going? Blah blah blah, all the usual stuff. But also, of course, I think if you've been watching the news, the recent maybe disappointment for pound bulls, but not for people paying mortgages, is what's been going on with interest rates. If we went back in time 6 weeks, broad expectation was for a rate rise. It was last week, wasn't it? So a rate rise in May. So another rise from the Bank of England in May. The guidance that was being given was suggesting that rates were going to go up. And then we've had Mark Carney, the governor of the Bank of England, famously referred to as the unreliable boyfriend, because the data was a bit weaker during late April. That rate rise never happened. So that really has put some pressure on the pound. But I think it makes it interesting. I must admit, I am surprised by how far it fell, how far it's fallen. We're back to, we're almost within sniffing distance of the lows of the year. We saw the lows, 11th of Jan, it dipped back towards the sort of 134 level, 134.50, and then of course just zoomed away. So I think it's really interesting here. I think that there's a couple of ways of looking at this. I mean, we could say we had that trend. You're looking at the trend line here. I've got an RSI down here as well. We'll come to that in a minute. Looking at the trend down here from March last year. So we were, a year and more into this recovery for the pound. All look pretty bullish. In April we were pushing back into the volatility seen overnight on EU referendum night, after the results were coming in, and we've given up, almost all of the gains for this year, pound US dollar. So I think we are at a crunch point. If we'd maybe just flip this over to, actually, before we do that, let's just I mean, the size of the decline, it was pretty relentless. We saw the market turn around, and we didn't see pound US dollar manage to break the previous day's high for about 2 or 3 weeks. Over the last week or so, it was starting to look like, well, are we getting, here we go, if we zoom in a bit, are we getting something of a basing pattern happening here? And we've seen the market having a go, but you can see in the last couple of days, it slipped back again. So it does leave us, for me, the big level to watch. It's the low from about a week ago, which is 134.60, and it's this low from back here, which is 134.56. Let's say 134.50. I think is a big level to watch for pound US dollar. If we flip it over to an hourly chart, we'll see just how this has been. Here we go. So we have seen in recent days, whenever we've seen the market dip below the 135 mark, we have seen the buyers come back in. So I think pound US dollar, there's no real major news coming out for the rest of the week. So I think it's all going to be about, well, how does the market react down here, and do we see buyers come back in? So maybe the potential trade is, if we're trading off that big level, is to look for strength with maybe stop losses below 134.50. If 134.50 gets lost, then I think there's a couple of ways of looking at this. It's a major break because we're breaking through the January lows, and I think if we're just trading it off support or resistance, perhaps the next big level to watch are these lows from mid-December, just before Christmas last year, around about 133. Okay, so that would be, that would be maybe one way that technical analysts would look at this if we saw 134.50 lost in the next couple of days. The other way is if we get this false break, and I think I talked about the false break in dollar yen a few weeks ago, and that really has delivered. The false break will be, everyone is watching this level now, 134.50. Everyone knows what the level is. The market's currently 134.74, so we're 25 points above that level. If it breaks that level and we don't get the follow through, it could be an interesting buying opportunity. Yeah, because it looks like a false break. And I'll jump on the dollar yen chart in a minute just to show you what I mean, and maybe we can look out for a similar thing here. But I think it's really interesting down at these levels. At the moment, you can see it has struggled, and this is the hourly chart we're looking at. We have gone, broadly sideways over the last week or so, but it really has struggled to make any progress, back through old highs, and we're back down here again. So the aggressive trade is expecting 134.50 to hold, a buyer with stops below 134.50. If we want to sit on our hands, let's see what happens if 134.50 breaks and we don't get the sell-off. Maybe there's an opportunity there. But it does, of course, I think if we do see, and I'm really sitting on the fence today with all these different options. If we did see 134.50 break and pressure, from there, so a follow through on the break, it does look like that recovery trend is over. Pound US dollar, that rally, I think it was one of the best performing, I think it was the best performing major currency sort of over the last 12 months because of the strength of that rally. But I think if we see the trend line has broken, if we see a break through this old support, it's difficult to make the argument that trend is still intact. So I think for me, that is the interesting market to watch in the next couple of days, pound US dollar, to see what happens around this 134.50 level. I'm surprised it's come off as hard as it has, but it has. That's it. It has come off that hard. So that is now, I think, really the big level to watch out for. Let's see what happens. What I'm going to do, I'm going to flip over actually to the new platform just to talk about this idea of false breaks and talk about what we could look for. And I'm going to go back to the dollar yen example. So let me just switch my screens around here. So actually, before we do that, I'll just show you this. There we go. Look at that. Look at this all singing, all dancing platform. So loads of stuff in here. News feed, biggest movers on the day, most volatile. So it's a really good market dashboard, I think, for when it comes to maybe finding interesting stuff to trade that you wouldn't normally be trading. But let's go and have a look at let's have a look at dollar yen. That's what I want to look at, just to show you this false breakout thing and what we were looking for on the pound. So this is the dollar yen chart. We looked at this whenever it was happening, so it would have been back in March, so it was a couple of months ago now. So we had this relentless sell-off in dollar yen. So the dollar, really getting beaten under pressure. Market sells off. Found a base at 105.50. Rallied, quite a bit. Rallied a couple of hundred points. Faffs around. Break. Spends one day. So these are daily candles. Let's just zoom in a bit. Spends one day where we have a big move to the old support, sort of 105.25 to 105.50. But the next couple of days, we don't get the follow through. And I think this is maybe the thing to watch for pound US dollar. If we see it break through 134.50 the next couple of days, do we get the follow through? If it starts to do something like dollar yen did, this is a false breakout. So again, the aggressive trade, if we break and don't get the follow through, would be to be a buyer. Let's go back in time and do our TARDIS trade. So we're a buyer at dollar yen here when we see the strength 3 days after the break, with a stop loss under the lows following the break. And so I think that's the thing to watch out for pound US dollar. But of course, we'll come back to it in a week's time and see what happens. And then since then, that dollar yen false break really delivered. There was no conviction after the initial break to be sellers. We did see, and since then we've seen dollar yen rally 500 points. I'm not saying the same thing is going to happen for the pound, but I think it's an interesting level to watch because everyone is aware of it. But it does tie into that story, I think, for this year. I talked about it a bit at the beginning of the year on webinars where everybody has been really, well, not everybody, but lots of people were very pessimistic about the US dollar outlook for this year. That last year the dollar had its worst year since 2003 in terms of decline, and everyone was really pessimistic. And often, as is often the case with market psychology, when everyone thinks a market is going to go one way, that's exactly the time it goes the other way. And this is what we've seen, with the US dollar this year. I think yesterday the dollar hit a 5-month high against a basket of other currencies, against the pound, the Swiss franc, the euro, the dollar index. So I think it is interesting. So personally, I do think that we could well see further dollar strength this year, but maybe in the short term, this move in the pound has gone a bit too far. Let's have a look. But I think it's going to be an interesting sort of week ahead. I'll jump back onto the existing platform now. So that's pound US dollar. It's 134.50. Big level to watch. The RSI, the old squiggles down here, the RSI, not surprising. With the move we've seen, the RSI has gone oversold. This is the most oversold it's been since October. Actually, that's October 2016, isn't it? It's not even October last year. It hardly, look at it, it didn't go oversold at all last year. We saw the market, the RSI would dip off, come back towards the 30% line, but never went oversold. So it shows you, I think, maybe how drastic, how extreme a move this is. So let's see what happens. If we get a bit of strength from here in the pound, we could end up with maybe some bullish divergence, which I've talked about in the past on webinars, where the RSI makes a low, the market makes a lower low, but the RSI is making higher low. So there's an awful lot to watch, and I do think it's maybe the main market to watch. And gold, actually, we'll come to gold in a second, but maybe the main market to watch over the next couple of days. Let's take a look at euro, because euro dollar, because we have seen dollar strength, obviously the euro has been under pressure, but the euro has actually broken yesterday. Let's just step this forward a little bit. Yesterday, this candlestick here, that was the biggest down move in the euro since October last year. So we had the biggest sell-off in euro in percentage terms that we've seen for about 7 months. So it looks, so far anyway, to have convincingly broken that big level. It's still under pressure. I think maybe levels to watch on the downside. Clearly we had this old support in November, down here ahead of 117. Bigger support out here at 115.50, but now with the move we saw yesterday, the continued weakness today, it does suggest this euro dollar downtrend is still very much in place. And at the moment, the expectation would be for rallies to run out of steam. Let's just flip it over to an hourly chart. There's the move. So it did hold for a bit yesterday above the sort of 118.20 level. but we had something of a dead cat bounce, and the market has sold off quite heavily. So for now, even if we got a euro rally, that trend off those highs is definitely still down. It did again. We had obviously this stuff doesn't work all the time, because the move we were seeing here, the 9th of May, this did look like the trend breakout. We had the downtrend in place, market rallies, and bang, just falls off a cliff. Suggesting that downtrend is going to continue. So euro dollar very weak. For me, it's a long way away from where we are, but we need to see a move through 120. I would suggest, to shake this weakness off. So for now, the pressure remains, I think, to the downside for euro dollar. And just one last one. While we've been talking about the euro and the pound, let's just take the dollar out of it completely. Let's take a look at euro sterling, because euro sterling, we've picked up on this a few times, how dull it was to the end of last year. But I think maybe that has changed, with some of the moves that we've seen in recent months. So we did have for euro sterling, we had it well underpinned by the 87 level. That started to change during April. So the market break down towards sort of 86.15, that sort of area. We've seen something of a bounce back since then, but over the last 3 days, we have seen weakness. So after being stuck in this somewhat tight, dull range, both are falling against the US dollar, but we're seeing the euro fall faster at the moment. So, I think euro sterling is an interesting one to watch if you want to take the dollar, the US dollar out of the equation. So I think maybe the interesting thing for euro sterling would be if we get back, to these old lows from 17th of April. So down around about 86.20, what happens down here. But you can see over the last 3 days, it has been under some pressure. So I think this break for euro sterling, maybe it does end up being, we'll look at it in 6 months' time as being something of a pivotal break. It had been stuck in a range, finally broke out, spent a few days below it, rallied. Let's see what happens next. I think if we break this 86 level, I don't think it's too pessimistic to start looking for a move back to 84, the sort of levels where we were trading maybe a year ago for euro sterling. So I think that's another maybe interesting side market to watch. Let's take a quick look at stock markets, and then we'll get into oil and gold. And I think gold is another interesting one. But let's start off with the old favorite, S&P 500. Let's bring that up. So masses of volatility, still in US stock markets, but at the moment it is sort of playing out how I was talking about it in early Feb. We had this, clearly we'd had what felt like years of US stock markets just going up, and then we had this enormous burst of volatility where the markets fell off a cliff from the end of Jan into Feb. We've seen some big moves since then, but I think we do have, even though we had sort of last week just continued rises, I think we do still have a lot of nerves in this market. And for my money, not that it's financial advice, I still don't think we're going to see new all-time highs hit anytime soon in US stock markets, because it does feel as if whenever we get a rally, it's almost as if people who maybe didn't get out on the way down here are happy to offload into any strength. So I think the fact that it looks like we're not going to get a full-blown trade war between the US and China has calmed stock markets down over the last week or so. But there still isn't, I don't think, maybe that much conviction. Clearly we've built a base. We've got these spiky lows ahead of sort of 25.30 from that big sell-off. We came back down to it, back down to 25.45 during April, and we are getting higher lows. So we are trying to build a recovery here, but I still just think that it's going to be a volatile, choppy market day to day. I think, as usual for me, the big levels to watch. If we flip it to maybe a 10-minute chart, it's pretty scrappy sort of moves. I think we've got a Duff price in there that's skewing my chart up, but I think pretty scrappy sort of moves. This was the trading yesterday. We saw relatively big sell-off from the 2730s down towards 2700. So I think going in today, looking at if we do see a bit more weakness, how does the market perform if we slip back towards the sort of 2,700 mark. Do we see buyers coming back in like we did yesterday? I think for day traders, previous highs and lows, the previous day's high and low can be really important levels to look out for. So let's see, let's see what happens. So, but I still think for US stock markets at least, sort of chop is still very much the order of the day. Oh, and someone's just saying, John in the webinar is saying that that the 200-day moving average has been providing support. I've seen that talked a lot about on Twitter. So now down near those sort of spiky lows, someone's saying the 200-day moving average. So again, that's for those of you who are looking at the longer term picture, classic trend following thing is a moving average. Crosses above the moving average, buy signals, crosses below a sell. But as noted here, they can provide support. Let's just flip over to the new platform just to look at some of the levels on the S&P, I think, for the days ahead. So what I've got here, I've got an hourly chart, and you can see, I think, the size of the rally over the last couple of weeks. It is a chunky old rally. We've gone from 25.95 trading as high as 27.40, so it's a 150 point move. So something like maybe a 1,500, slightly less than a 1,500 point move in the Dow. That is a big old move. And over the last couple of days, we have seen the weakness coming in. But I suppose if you wanted to be aggressive, if you thought, well, actually this is just a little sell-off and the market's going to power higher, one way of looking at the trade is stops below this 2,700 level. Okay, so we have seen something of a bounce in the overnight market. Let's see what happens. I think it'd be interesting to see what happens. We don't really have any major data coming out the next few days, but so for me, I'd definitely be watching these previous days' highs and lows to see how the market fares and see what happens. But 2,700 on the S&P. Now, the market that's been for stock markets, the one that's been maybe a little bit odd, but as usual, it can be explained by what's going on with sterling, is the FTSE. Let's flip this out to a daily chart. So we've got US stock markets volatile, still a long way off their previous highs. Look at the FTSE. FTSE yet again doing its own thing completely. Massive rally in the FTSE since these lows from back here. So we go back to the lows, 22nd of March lows, about 68.50. The market at the moment is trading at what, 77.40. So we've seen. I really struggle with the maths in my head then. So we've seen a 900 point. It's a 900 point rally. So a 900 point rally in the FTSE in the space of 2 months, 15% move in the FTSE, and clearly, what has lifted this market at least over the last few weeks, what's definitely helped lift the market is the weakness in sterling. We've seen this massive turnaround, pound US dollar. As I've said a few things in the past, the FTSE is always a bit of an odd index because so many of the companies in the FTSE 100 derive their earnings from overseas. So if they make money in dollars, when they repatriate that and book that as pounds, clearly, the exchange rate affects their P&L. So a weak pound is good for the FTSE. So that's definitely powered the market higher here. It's difficult to see, that it's suddenly replicating that move over the next couple of months if we don't get a similar move higher in the US markets. But the big level to watch on the FTSE is an obvious one. It's these all-time highs from middle of Jan. So what's the high? 7,800, near enough 7,800. So at the moment we're 60 points off all-time highs. So I think that's a really interesting one to watch. And if you were convinced the FTSE was a major sell, we're getting back to the levels where it starts to look interesting. Well, we are at the levels where it's looking interesting, because by definition, if it's going to top out, it should start running out of steam pretty quickly. And 7,800 is the line in the sand. And if we break 7,800, maybe we get the start of a breakout and a move much higher. Personally, if we're gonna see weakness in US stock markets, I can't see the FTSE suddenly deciding to carve its own way unless the pound falls off a cliff. So I think there's another reason there to keep an eye on the pound. But it has been, you can just see it on the chart, can't you? That has been a heck of a move over the last 2 months. So very handy 15% return if you'd managed to buy the lows in there. So let's see what happens. 7,800 on the FTSE, big level to watch, but very much what US markets do and what the pound does will be determining things there. Right, two more markets, then we're done. Crude oil. Crude oil first of all, then we'll look at gold. So we'll look at the US flavor of crude oil. So we've had this big rally since the summer. So crude oil was about, there we go, $42 a barrel in the summer of last year. I'm sure, like me, I noticed at the weekend, went to fill up 129.9 a litre. So at a price of petrol, as they always do, when the oil price starts rising, they're very quick to move the price up at the pumps, and when it's not when it starts dropping, if I can get my words out, not so quick to follow it down. So here's the move up from the lows. We are still very much. Oh, if I could draw my trend line. See, I'm out of practice drawing lines. That's my problem. If we let's pick up it on from here. Oh dear me, what a cockeyed line that is. Let's just plonk that back. This trend for oil is still very much intact. I've seen, a few comments from people about $100 a barrel being the next target for oil. We're trading at 71 at the moment. And I think if we start to hear a lot of that, that could be the time to go the other way. The same way when we were coming into this year and everyone thought the dollar was going to do really badly, and it's at a 5-month high. But the trend is still up. It's been a pretty low volatility week for oil. All right, so we are seeing some nerves. It did try to break higher yesterday. Let's just zoom that in. But end of the day, pretty flat. You can see we've got the candlestick there. They've got long shadows, but open and close pretty much the same. So maybe in the short term, at least, again, looking at the RSI, maybe the price is getting a little bit overcooked up here. Maybe we're due something of a correction. However, as we've been saying all the way through this move up, the trend is still up. So for now, at least, any weakness in the price of oil still looks like a buying opportunity. So some obvious levels to watch. For me, it's the first level off the daily charts is here. So we're looking at the 17th of April lows, about $65.50 a barrel. These lows here, we can see where it faffed around for a good week or so, around about 66.70. So sort of 65.5 to 66.70 for me would be the first pockets of support to watch. But we've got the trend line coming in at 64.5. We've got big support at 62. Basically, to me, it's saying that if we do see, even an 8% drop in the price of oil from where we are now, it still looks like it's within that trend. It has been a heck of a move, up 50% now, more than 50% since the summer. But it's a market where just yesterday it did nudge out to fresh highs, didn't hold on to it. But it's a really interesting one to watch, and any weakness looks like a buying opportunity. I think it's only if we start to lose these old supports, from the beginning of the year, and it was only back in Feb that the lows were coming in about $57, $58 a barrel. We're already 20% and more higher than that. So I think for oil, even if we see it sell off by 10%, there's an argument that trend is still up. So it's an interesting one to keep an eye on. And the last one, which for me is up there with the pound at the moment, is a price of gold. Price of gold. So just to pick up on some of this stuff, it had been something of a dull time for the price of gold, for this year. We had that move, that big rally from just before Christmas, where it went from 1240 and then continued this year. And then this year it's been really sideways, but it has been really well underpinned by $1,300. So whenever we'd seen old gold pushed down towards the 1300 level, the buyers had come back out, the market had turned around, we'd ran up to 1350, 1360. But we can see again, we've seen this dollar surge. Yesterday it broke, so it's broke that level, the first time we've been below 1300 this year. So as usual, the question is, well, is this a false break? I have to say at the moment, with it slipping a little bit lower today, it doesn't look like that. So let's see what happens. But I think it's an interesting one the next couple of days. Now we've slipped below what has been a pretty big level. We've poked a little bit lower today than yesterday's low. The RSI is almost oversold, and you can see just going back, this is a year's worth of data we've got on gold. It doesn't go oversold very often, it only ever has a little flirt with oversold. So again, if we were looking at the RSI, we might take the view well, maybe this move is overdone. So I would say again, there's maybe a couple of things to watch here. If we're saying, well, this 1300, this break below 1300 is maybe something of a false break. I think we've got an obvious level to look at just on what's happened today, maybe in the last hour. So we've spiked as low as what, sort of 1286, 1285. Let's see what happens the rest of the day. If we saw the market recover from here, it does add to the argument that maybe this move below 1300 yesterday, a level everyone was watching, a level you would assume there would be a lot of stops below. Is it just something of a freak move and the market's going to pull back into its range? So I think let's watch how it performs this afternoon. But I think we need a couple of days more confirmation to see which way the break is going to go. But if it is a valid break, there's a lot of fresh air back to these old lows, back to the lows, the pre-Christmas lows, down about 12.36. So I think for gold and pound US dollar, gold has broken the big level, pound hasn't yet. There may be the two major markets to watch. So even though there's not much in the way of data coming out the rest of this week, I still think there are arguments, to keep an eye on these two markets. So what we're going to do, we are going to wrap things up there. So that's the first webinar with Capital.com. We'll do this every week from now on. Same sort of format, half an hour. We'll look at different trading strategies every week. As usual, there'll be a recording available. But if you've got any questions afterwards, drop me an email. My email address now is david.jones@capital.com. You can follow me on Twitter at Jones the Markets, and I will be doing more tweeting than I have done for a while. So just keeping an eye on these big levels and all that sort of stuff. And we'll do all of this in a week's time again. So thanks for coming along. Enjoy the rest of your afternoon. Nice to see some familiar faces in here, and we'll do it all again next week.